Tesla just shocked the market not with numbers, but with a narrative shift that could mark the start of a massive turnaround. Dan Ives is calling it a critical moment, and we'll break down exactly why. But it doesn't stop there. In this video, we're not just talking Tesla, we're revealing two more powerhouse stocks riding the same wave of clarity, leadership, and innovation. From the AI arms race led by Nvidia to Apple's silent transformation into a high-margin, AI-fueled subscription empire, these aren't just stocks, they're movements. And if you've been following your channel, you already know, we don't chase hype, we call breakout moments before they happen, so buckle up, because this could be your early entry into the next big move. First up, Tesla Inc., TSLA. The most polarizing, disruptive, and closely watched stock of the decade may finally be entering its next bullish chapter. Yes, Tesla missed earnings and revenue expectations in Q1 2025, but beneath the surface, the fundamentals tell a far more compelling story. Despite a 20% year-over-year decline in automotive revenue, fueled by global backlash and political friction, Tesla surprised analysts with resilient gross margins of 16.3% and a stunning $664 million, 0 cents in free cash flow. That's a $3.2 billion 0 cents swing from the prior year, proof that the business remains robust even in a shaky macro climate. What's driving the narrative shift? According to Wedbush analyst Dan Ives, it's Elon Musk himself. Musk's performance on the recent earnings call was described as a critical inflection point, a return to disciplined focus and delivery. He hinted at stepping away from political distractions and reaffirmed his commitment to Tesla's mission. That recalibration could be the sentiment reset investors have been waiting for. But sentiment alone isn't what makes Tesla compelling right now. The company's preparing to launch a lower-cost Model Y, targeting a huge segment of value-conscious EV buyers. Add to that the anticipated robotaxi rollout in 2026, and Tesla isn't just holding its ground, it's going on the offensive in a way few EV rivals can match. Trading at just 6x forward revenue, Tesla is now at one of its most attractive valuations in years. With sentiment repairing, innovation accelerating, and strategic focus returning, this may be the beginning of a multi-quarter revaluation. Second on our radar, Apple Inc., AAPL. A name so entrenched in global tech ecosystems that its movements can shift the entire S&P 500. Often labeled a safe stock, Apple is anything but static. Beneath the surface, a strategic transformation is underway, one that's repositioning Apple as a high-margin, AI-powered subscription empire. In the most recent quarter, Apple posted $36.3 billion 0 cents in profit and nearly $30 billion 0 cents in operating cash flow, a masterclass in elite execution. The real gem? Apple's services segment, which generated $26.3 billion 0 cents last quarter alone, growing 14% year-over-year with eye-popping 75% plus gross margins. That's more profit than the Mac, iPad, and wearables divisions combined. From Apple Music and iCloud to App Store revenue, the services engine is now the gravitational core of Apple's business, sticky, recurring, and massively profitable. And the future? Even brighter. Apple is pouring billions into artificial intelligence, spatial computing via Vision Pro, and custom silicon development. Siri is getting a long-awaited AI overhaul. The Apple ecosystem isn't just expanding, it's tightening its grip. Despite a 24% pullback from its highs, Apple's fundamentals remain pristine. Finally, let's talk about Nvidia Corporation, a company in a league of its own when it comes to riding and defining the most powerful tech wave of our generation. If Tesla is the face of electrification, Nvidia is the engine of the AI revolution. In a market riddled with uncertainty and noise, Nvidia remains the cornerstone of clarity and conviction. Short-term volatility has weighed on its stock price, but the fundamentals remain unstoppable. With over 90% dominance in the global GPU market, powering generative AI, robotics, and autonomous tech, Nvidia isn't just participating in the future, it's building it. Forward revenue projections continue to surge, with 54% year-over-year growth expected into 2026. From enterprise AI and industrial automation to defense and national security, Nvidia's reach is vast and only growing. Analysts like Dan Ives see Nvidia as the gold standard in execution. Its technology underpins critical infrastructure for both corporations and governments, and as demand for advanced computing explodes, Nvidia stands unmatched. Even after a 26% year-to-date drop, Nvidia still commands one of the best growth profiles in tech, boasting gross margins over 70% and a PEG ratio below the sector median. This isn't just a dip, it's a generational opportunity to buy the backbone of the AI era.